Hello and welcome to another Thrive Tribe podcast. And today we've got Robert Drury joining us, and he is a mortgage advisor based in the county of Lincolnshire. Robert, thank you very much for joining us.
It's a pleasure, Mark. Thanks very much for having me on. It's an absolute treat. Thank you.
Hey, no problem at all. So let's get started. Tell me a little bit about your business story. What's led you to this point?
Well, I've always worked in finance ever since I left school when I was 18. So I've worked for some well-known high street banks that everybody will have heard of: NatWest, Britannia Building Society, that was part of the Cooperative Bank, and Santander. And I did many roles within finance. But about 6 years ago, I decided to go self-employed as a mortgage broker. I've been mortgage broking for about 15 years at the time. So I decided that the time was right for me to go self-employed as a mortgage broker, and that's how I've ended up doing what I do now. So yeah, always been in finance.
Yes, for my sins, I was a mortgage advisor very, very early on in my life. And it is a very rewarding job, isn't it?
Yes, it's really nice when you help first-time buyers when they first get their first house, they're walking through the door with the keys in their hand. They sometimes phone up and you can just hear the excitement in their voice. So yeah, it is very fulfilling when you get to that stage of the job, but there's an awful lot that goes behind it.
Yeah, definitely. I definitely know what you mean. So, in terms of yourself and the business, what's your mission?
Our mission is to help as many people as possible with their aspiration to buy a house. There's a saying, isn't there, that an Englishman or an Englishwoman's home is their castle. And I truly believe that. I think it's one of those things that we all aspire to. And if I can be a small cog in the process to get them there, then I think that's a fantastic aspiration to have.
No, I do. I love that. And as you say, everyone deserves to own a home. And as you say, that first one especially is the exciting one, isn't it? Just to get people on the ladder. And obviously
Absolutely.
after that, yeah, then it's obviously moved to larger houses, potentially remortgage to save money and everything. It's not a sexy subject, is it? But it's one that we undoubtedly, go through a few times during our lifetime.
Yeah, a lot of people say, "Oh, it's an adult conversation," and it is. But we can also make it have a little bit of fun along the way, but still be professional and get there. But yes, it's something that is grown up, shall we say?
Definitely. But it is one of those subjects that they really should tackle at school, shouldn't they? In terms of, I know that there's a big thing about finance and savings and everything else. And I know governments have done their best to try and do little bits and bobs, but it's one of those conversations where, as you say, it is an adult conversation. But if we were to start educating the children at a younger age just about, what happens during adult life, it might mean, because I know there's a lot of people that think that, some of the children at school now will really struggle to get on the housing market. But it's all about
Yeah,
the education piece, isn't it? And letting people know
no,
earlier.
I 100% agree with you, Mark. And I've actually been very fortunate to be able to do some assemblies at some schools, both secondary and now primary, because they want the children to actually learn at an early age that there's an aspiration to own a house. But simple things like, what's budgeting, what does it mean if you only have £10 but you spend 11? It's better to spend 9 and save 1. It's simple things like that which would actually be, I think, and you obviously agree, I think that would be very, very useful for all children going to, whether they're going to work, whether they go to university, and their later life. So yeah, I 100% agree, and that's why I do what I do with the schools.
Yeah, no, that's really, really good. And I say, just if you can change a few minds at an early age, that's massive, isn't it? In terms of savings and not spending all the pocket money and putting money aside, and again,
Absolutely.
it's that education piece, isn't it? In terms of like compound interest. So a pound now, the same pound in 20 years' time is potentially going to be worth, 2 or 3 times as much if it's put away and saved in the right way.
Correct. Absolutely. Yes.
Yeah, that's cool. So your vision. So what is your vision for your services?
Our vision is to be known as one of the, or if not the best, mortgage company in Lincoln and Lincolnshire. Yes, we are able to help clients across the country, which I'm sure we'll talk about later. But obviously, I'm a Lincoln boy, born and bred. I'm very proud of that. I'm also proud of the service that I offer as a mortgage advisor. The years of advice that I've been doing on this. So yeah, it's to be known as and recognised as the best mortgage advice team in Lincoln and Lincolnshire.
No, I love that aspiration. As I say, everyone, obviously we know each other from different circles, but yeah, everyone does know you as doing a fantastic service. And some of the background work that I've done with this is looking at, testimonials and your website and things. And yeah, you have some wonderful, you know, heartfelt testimonials about your services. So really well done with that.
Thank you.
So you've mentioned how you got started in terms of your background in finance. So do you want to elaborate on that a bit more? So obviously, what made you change from the corporate banking world to obviously setting out on your own terms, doing, being self-employed and doing it for yourself?
Yeah, I mean, that's a really good question, Mark. And I can nearly remember the time that it happened. So going back to my background, as I say, I've worked in finance all my life, and I've done many roles in there. I've done. I mean, when I first started, I was processing checks. So if anybody watching this doesn't remember what a check is, they think, well, is that something that we do on an app? No. We used to give people little bits of paper. So that's how long I've been doing it. But I've done many roles. I was a manager for a while. I was a financial advisor for about a year, doing investment stocks and shares. I've done audit, all those little things, but it always seemed to come back to being a mortgage advisor. It was the one thing that I enjoyed above all of the other roles that I've done in finance. I was working for Santander about 2016, 2017, it would have been. And I remember going to this conference. The conference was there for two reasons. They were slimming down the number of mortgage advisors that were in branches. So it was already starting, I could see that it was already starting to become not profitable for them and all of the other banks, to be fair, to have an advisor in a branch. But they said something to me which really stuck with me, which was they were already, I think it was over 2/3 of their mortgage business was coming from brokers. And I thought, okay, well, this is only going one way. I then had two clients, really nice couple, two nice couples that I really wanted to help. But because of Santander's policy, and all banks have their policies, and I'm not having a go at Santander. That was their decision that this is something that they're not going to lend on. I could see why it would make sense to be able to help these customers, and I couldn't do it. But if I'd been a broker and I'd had the opportunity to look at the full market, and we have over 70 lenders that we can use, then I would have been able to help those. So these two things together, and also my personal circumstances had changed. My children were grown up. It was just the right time to decide to become self-employed and become a broker. And I've never looked back since. And I can now see that, yes, I would have been able to help those two clients, but I have been able to help so many more clients that if I had stayed with Santander or any other high street bank, I wouldn't have been able to do that. So that's why that's how I've ended up where I am now.
It's funny that because I know my father used to be a bank manager many years ago, again when checks were in circulation, and he ended up leaving because obviously the banking service has changed, massively over the last 30, 40 years.
Yes.
Obviously, when we were really, really young, I'll just add in that for me and you. But yeah, that's he got out. When you could no longer go in and see your bank manager and ask to borrow money for whatever reason. That's when he decided that he wanted a change, and that for you in the mortgage service, having that whole of market offer rather than just and people do, don't they? People do sometimes just go, I'll go back to the bank because I've been with them for years.
Yeah.
And people do the same, don't they, with utility? People have always been British Gas and just keep paying British Gas. Whereas if you look at the whole of market, mortgage or utilities, potentially there's savings to be made. And how do I put this nicely? The ties that we had with our establishments, banks, utilities, and a whole load of other things, now that there's no longer loyalty, is there? From the other way around as well. As you say, you had two wonderful people that you wanted to help, but because of the constraints of selecting the right answer and having the right income, you couldn't actually help them. But
Yes.
in your mind, I'm assuming you knew the affordability was there, and if you had the whole of market offer,
Oh yeah.
you could you could help more people.
Absolutely. Yeah, no, definitely. And you are right. It's a shame that loyalty isn't what it used to be, but it isn't.
Yeah,
And actually, in some ways, if you are loyal to whoever, if it's your bank, if it's your utilities, that doesn't necessarily mean that that's financially or ethically correct for you. So,
yeah, definitely. One thing I did stumble across while I was doing some research for our meeting today is you are quite prominent on TikTok.
yes.
Yes. Um, I love it. I love it. The education piece. I know we spoke about education before, but that education piece that you're delivering on TikTok, what gave you the imagination to hit that social media channel?
Well, it's twofold. I'll give you a shout out, Mark. Obviously, the Thrive Tribe, who I've been working with recently. You're telling us about all the social media outlets that we can use. But we've got some friends of ours, and they've got a daughter, Sophia. I'll give Sophia a shout out. She's 16. She's very savvy. She's a lovely, lovely young lady. And we went round for an evening meal with our friends, and they eat. Her and her brother eat with us. And we got talking about TikTok, and Sophia says, "Are you on TikTok?" And I went, "Well, yeah, but I'm not really using it." She goes, "All right. How many videos have you got, and how many followers?" And she laughed when I said how many followers I've got. But she made a very, very important point. She says, "Look, I'm 16, but maybe in 5, 10 years' time, I'm going to be a first-time buyer. All my friends at school are on TikTok. If we want to know how to cook an egg, we'll go on TikTok. If we want to know how to, I don't know, darn a hole in a sock, do people do that anymore? I don't know. But you know what I mean? Whatever it is that they want to find out, a large majority of these kids are doing it through TikTok. So it's only going to, well, I can see at the moment, it's only going to continue to become a source of information. And first-time buyers are one of the groups of clients that I'm very, very passionate about. You were talking about an education piece. When I see a first-time buyer, it's not just about getting them a mortgage. It's an education piece. It's about it's about budgeting. It's about insurance. It's about everything. It's about everything. So if we can start early, and well, if they're saying that they use TikTok, that's where I need to be on. And I know we've spoken about this, Mark, but already I've had 2 people contact me through TikTok, and I only spoke to one yesterday. And hopefully we're going to meet up now and face to face and see what I can do to help him. So it's already bearing fruit. So yeah, that's how I've ended up being on TikTok.
No, I love it, and that's the thing is that I think a lot of people think it's a young person's game, TikTok, and it is in terms of the people that take in the information. But it just goes to show, isn't it? If you're out there on social media and you want to help and you genuinely give, the advice you give on TikTok is really really nice. It's a lovely thing to watch, and it does have its rewards. People will take notice and will contact you. So yeah, that's really really good. I say just want to mention that. Give a shout out
Thank you.
to you and
Yes.
TikTok. For some of those others that are maybe my age that think shall I shan't I, if you've got information to share, then do it across all mediums, because there's going
Yeah,
to be
absolutely.
people,
Yeah.
people on all platforms that are going to want the advice that you give. Yeah, that's brilliant. Thank you very much. So looking at the customers that you have, who do you like or who do you love helping the most?
Um, I mean, I like helping everyone. I genuinely do. But there's a couple of groups that I really do enjoy more than others. I've already mentioned one, which is first-time buyers. The majority of first-time buyers know very little, and by the end of, even if it's just the initial meeting, when they want to first-time buyers kind of want to know 3 things. All right, 3 things. So first one is, how much can I borrow? Second thing is, how much is that going to cost me a month? And the third one is a general, well, what's the process? Once I know how much we can borrow, what do I do, Robert? How do I, things like, how do I put an offer in? Who do I speak to? Can I offer slightly less than what's that it's on the market for. So it's a real education piece. And the first time buyers, even after that initial meeting, say, "Oh, that's been so useful, Robert. Thank you so much. I know so much more now than I did when I first came in an hour and a half ago." And like I said earlier, when the first time buyers get the keys and they walk through the door, and I always send them a welcome card, and they say, "Oh, thank you for the card. It's the first one I've got. It's the first bit of mail that I've got." You feel like saying, "Well, it won't be the last. You'll get plenty of bills." But that's the first group. The second group is a very different group, and it's people that have found themselves in financial difficulties. Let's put it that way. They maybe got themselves into debt, and they're finding it difficult to make ends meet. And the reason I find that very satisfying is I've been a first time buyer, obviously, but I've also been in that situation where I've had debt. I've been in that situation where I've woken up at 2 o'clock in the morning and I've actually gone downstairs and written down on a piece of paper how I could potentially get that credit card paid off or get out of that overdraft. Now, I've always managed my finances well because I've always worked in finance, but I understand the worry. And I think the first step for those clients is always the hardest because it's an acceptance that they have got themselves into debt. And sometimes they feel embarrassed, they feel guilty. And I don't judge because I've been there, how you've got there doesn't matter. I always say to them, well done for coming today. Well done for sort of opening up. People have cried at the start of that process, but most satisfyingly, I've had clients cry at the end of the process, but for very different reasons, because they've actually said, "I can sleep at night. I feel a lot happier." And we've only got one life, and if we can live it and be happy, then I think that's very important. So first-time buyers and people that are, when they come to see me, are in financial difficulties, but hopefully by the end are on the road to financial recovery, are the two groups that I really love helping the most.
No, that's brilliant, isn't it? And I'd say, with the cost of living crisis and everything we went through in 2019 for a couple of years, it's totally understandable, isn't it? As I say, not everyone is going to have masses of surplus cash every month from working, whatever walk of life that you're in. So we have to help those people that, potentially, may, and it could just be one wrong decision, couldn't it? Which leads to them, having issues. But to help them out, even if it's just on the road to recovery, just telling them what they need to do and then potentially finding something that will, reduce their bills, and so they can clear off the debt and potentially, save money on their mortgage is really admirable. And I say it must be a wonderful thing when you help people and they see the light at the end of the tunnel.
Definitely, absolutely, yeah.
That's cool. So my next question then is, why should people come to you, Robert, for mortgage advice?
There's two bits here. The first one is that, and I've already touched on it in my last answer, is I have been in that position of the client, so I understand what it's like to be a first-time buyer and not knowing what you're doing. I had an endowment mortgage. Again, that's one for the children. That's one for the kids watching. But I didn't understand what I'd taken out. So first-time buyers, I've been there. I've moved house. I've been in debt. So I understand. I empathise with what clients are going through, and I also don't try to use jargon. It's like any walk of life. We've all got jargon, but finance is particularly good at having things, ERCs and LTVs, and and people say, "What's an LTV?" and you explain what a loan to value is, and what's an ERC, and it's an early repayment charge. So I don't use jargon. So that's one reason why I'm very simple in a professional way with the way that I explain things. But the other one, and again, this is something that I know we've been speaking about as part of the Thrive Tribe. It's things like helping people who are very busy nowadays. They've got very little time to do an awful lot. So there's an awful lot going on in the world. And if they can come and see me for an hour and a half, then I'll take it on and I'll deal with that. So that will save them an awful lot of time trailing around the high street. And it might not even be a high street lender that they need to go to. Obviously, they've got my professional services. If they've got any questions, they can come to me. It's a one-stop shop, so they don't, as I say, because I have had customers who've gone to their bank. You said it earlier, Mark. You go to the bank that you've banked with for years.
Yeah.
If they turn around and say no, you've got to start the process all over again. You've got take another day off work. You've got to go into the high street and you've got to say, right, okay, which bank am I going to pick now? And hopefully they'll say, yeah, but I have had one or two clients where I've had to go to a third lender. Now, if you've done that yourself, you've probably impacted on 3 days. You know, if you've got a young family, or people want to do more enjoyable things than sorting the mortgage out. So that's why they should come and see me. There's also trust and credibility. And for me, the best, because occasionally I always ask a customer, how did you find me? I had one yesterday and they said, oh, our friends recommended you. And that's music to my ears, because somebody else that I've done a mortgage for said, look, go and see Robert. So people come because they trust me. I'm credible and all that sort of thing. So those are a few reasons why people should come and see me. And I do make a decent cup of tea as well.
So that's even more of a bonus.
Although you can't do that virtually.
No, that is true. But I think, you really raise a valid point, because when we've had new mortgages in the past and you go in to see your existing bank, and as you say, it's on their terms, I can book you in to see an advisor for like an hour on a Saturday, and it's all that time. Whereas now, obviously, if you can see people face to face, brilliant. But because you can offer mortgages, anywhere in the UK and things, then obviously Zoom is quite good. It's efficient. Zoom or Teams, other Google Meet, other things are available. But you still get to build that bond, don't you? Which is nice. And as I say, if you can have a cup of tea together, brilliant. But I think, especially as you say, in this busy age, it is always nice to be able to have that flexibility that you can, hop on a call, whether it be, virtual or just over the phone. And that's one of the things that I've seen to remember from the bank. When you used to, if you were going for a mortgage process with the bank, so many moons ago, even to get hold of somebody, to speak to somebody, was near impossible. By the time we spent 20 minutes on the phone punching in 12 different extensions, you could never get to the person that you wanted. Whereas obviously somebody like you are very quick at response times, even to the stuff that we're doing together. Always there, always willing to hop on a call at 8 a.m.
Yes.
Late into the evening, and that's why we do what we do, isn't it? It's having that flexibility that hopefully everyone can engage with the service at a time and place that's convenient to them.
Absolutely, yeah.
That's cool. So what are your 3 top tips for people looking to get a new mortgage?
That's a very good question. I think the first one for me is about your credit rating. I always bang on about this with clients, but I always say to them, once a year, it'll only take you 15 minutes, but once a year is check your credit rating, whether that's with Experian or Equifax. They're the 2 main ones, because your credit rating has such an impact on everything. But with regards to your mortgage, if your credit rating is good, then you are hopefully going to get a high street lender with a very good interest rate. If you've got a poor credit rating, then you're either going to get a much higher rate, or there is a potential for not actually being able to get a mortgage at all. And it also impacts on lots of other things in your financial life. So the first one is once a year, 15 minutes, you could be sat with a biscuit and that cup of tea that I've made you, but check your credit file, because so many people don't know what it is. And I don't think people realize how important that is to your financial health. The second one goes back to the debt management that we were talking about earlier. Is, again, a minimum of once a year, is make sure that you've reviewed your finances. Make sure that you are not maxing out your credit card limits, because that does impact on your credit score, and lenders don't like that. If you've got a credit card with a maximum limit of 5,000 and you've got £4,999 on it every month, that will show that you're under stress. But also review things like your interest rates. And people might say, well, why is Robert saying this? Because he's a mortgage advisor. But I've worked in finance all my life, and I'm there to help people get the best from their finances. I've seen people that are on credit cards of 24, 30%. I've seen people on overdrafts where they're paying 40%.
Wow.
And sometimes they don't realise, you said about compound interest earlier, Mark, but people, and because we've not educated people at school, and also through their adult life. People don't actually. So I'll show them on the statement. It says, do you realise that you're paying a minimum payment, and half of that money, nearly half of that money, isn't even going off your balance? And of course, all of these things impact on the affordability of a mortgage. So this is why it comes back to the mortgage. People say, "Oh, right, oh, I didn't. I thought it was just on my income," because, well, it used to be. Probably when you were a mortgage advisor, Martin. Definitely when I started, it was very easy. If you earned £30,000, you multiplied that by 5, and that's how much you could borrow. Nowadays, it's more an affordability. So that would be the second thing. And the third thing is, there's lots of things, but I would say how important a deposit can be. If you've got a healthy deposit, so if you've got a 10%, 15%, however much you can put it in, that's going to give you a better interest rate. And there are many times when somebody say, how much have you got for a deposit? And they'll say, oh, I've got 32,000, but I only want to put £25,000 down. And that's, let's say it's 14.9% deposit. I say, well, if you just squeeze an extra £500, 1,000, I'm not belittling that amount of money, by the way, but if you can squeeze that out, let me show you what the interest rate. Oh yeah, that's good. So yeah, it's deposit. I'm going to throw a fourth one in. I'm being a bit cheeky. I've just
that's all right.
Else as well. Overpaying. I'm a very, very big advocate of people being able to overpay. Go onto any of the big banks' websites, go onto their mortgage overpayment calculator, and just put in 20, 30, 40 pounds a month. You'll be amazed. People will be amazed how much that will impact on your mortgage. Because at the end of the day, nobody wants a mortgage. They do, they'll come to see me, but nobody wants to have lots of debt. So if you can get it paid off quickly, then do that. So a little bit cheeky, an additional fourth one, but yeah, those are my top tips.
No, that's cool. That's perfect. Thank you very much. And I think what it's opened my eyes to is potentially, even if you think either A, I'm never going to get a mortgage, or my credit's shocking. I think if they have that conversation with you, might be an hour of their time just for you to go through, with what they found and what it means to them, and so I know, some kind of plan for what they can do long term, to bring down, anything that's going to have an adverse effect on their credit. I appreciate you're a mortgage advisor first and foremost, but it's simple stuff, isn't it? So, if you're, if they come to you and just say, this is the situation that I'm in, you can give them some friendly advice as to what they could do over 6 months or 12 months, even if that's the longevity of the situation. But as long as there's a plan, then I think, they can obviously look at the plan over 12 months, take some action to it, bring it down, and then obviously keep in touch with you, and then, when the time's right, then obviously they can look at getting that new mortgage or getting that first mortgage or anything like that.
Yeah, no, absolutely. Yeah.
That's cool. So I think my thing is, and I think I'll do it as well. We'll touch base once a year, show you the situation that I'm in, because obviously rates and things change, don't they, in terms of mortgages. So I think it's definitely well worth doing. So with that in mind, is there a right time to move house or become a first-time buyer, in your opinion?
Yeah, great. The reason I'm smiling is because that's a great question, and I get asked it loads. Even before I was a broker, when I was working at Santander and Britannia, a lot of people say, "Oh, when's the right time to buy?" And my answer to that, Mark, is it's right time to move or buy or whatever when it's right for you. You can wait and wait and wait. I've had people that I know that have waited for lots of different things in life, and there's always a reason to put something off. So you might go, well, interest rates are a bit higher than they were 2-3 years ago, which is correct, but they're still relatively low compared to where they were again when you and me first started mortgage advising.
Definitely.
When they had a 1 at the front. People go, what's going on in the world? What's going to happen here, there, and everywhere? What about my finances? Hopefully, I'll be earning more next year. Yes, you might be, but if you feel it's right to move now, if you feel it's right to buy your first property now, if you feel it's right to go up the ladder, then it is the right time to do it. And you can wait forever for interest rates to change, but what if they start to go up? Then you'll say, "Oh, I wish I'd done it last year," but I'll wait again. So another year goes by, another year goes by, and house prices go up, and there could be another cost of living crisis. We never know. So it's that's my own opinion, but I say yes. If it's right for you, then it's right for you. And I know that's a bit of an odd thing to say, but hopefully you understand what I mean there, Mark. Don't put it off. Yes, there will be times when it isn't right to do it, but don't wait for something that might never happen.
Yeah, no, I totally agree. And I think there's the other piece as well, isn't it, about the people that are paying quite high rents?
Oh
So
yes,
yeah, so that the rental market, in 2025, I see people's attitudes on social media when somebody puts a house up for rent and what they're looking for. And people do say in the comments, it's like, you get a mortgage for that, and it's like you could, but some people either haven't looked or have rented for many many years. So I think, as you say, there's any time is the right time, and I think they just need to come and speak to somebody like you, um, and get that advice. Free consultation at the beginning.
yes,
Yeah, and that's what I mean, isn't it? It's having that one conversation that will then lead you to know the situation you're in, as you say, affordability, what your dreams and aspirations are, and then, when it's a different market, isn't it? So when we were young and our parents, that's all they wanted to do was just pay off the mortgage, wasn't it?
yes,
They had potentially a 25-year mortgage. As you say, endowment was a thing then. Nowadays, it's just repayment. And the 25 years, and they longed for that point, and then they had a whole wealth of money at the end of the time. They had an asset for them to keep, and then they potentially had 300-400 pounds a month. They were better off because obviously back in the day, 25 years. So yeah, I think it's one of those things. I think, I say, I just wanted to ask that because I know that's the question that people ask, isn't it? And
mm,
as you say, it's just having that conversation with you, to see the situation that they're in, see what's out there, and then from there they can then, well, it impacts on the rest of their life, doesn't it? It's great to be
yes,
on the housing market to start with, and at the same time, if you've got, if you're looking to reduce costs, downsides or upsides, it's just having that one conversation that starts the ball rolling, isn't it?
absolutely, yeah, no, totally agree, yeah.
That's cool. And with that, whereabouts can you help clients purchase properties?
Uh, yeah, I mean, again, a very good question. So, um, when I started broking, which was December 2018, the answer would have been Lincoln, Lincolnshire, over the border near Newark. I went out to see a client all the way to Nottingham. Got a nosebleed for that one. So yeah, that was your core. As I said to you earlier, I'm Lincoln born and bred. I'm a Lincoln City fan for my sins. I know we've spoken about football,
We
but
have.
I am proud of being from the city, and therefore our core customer base was and still is Lincoln and Lincolnshire. But of course, then not long after I'd started, so I'd gone self-employed, become a broker, and then unfortunately COVID hit. And after the first few weeks of everybody wondering what was going on, obviously we all started to settle into what we were doing. And as a mortgage broker, I started to use Zoom, which was an absolute godsend. But of course, I had to use Zoom for every client. So there could be my neighbour, there could be, just over there in Skellingthorpe where I live, but you'd still need to do Zoom. But then we realised, and we started getting inquiries from people further afield. I've done a couple of mortgages for people in Scotland, which is, there's a very different process up there. I've got now a loyal customer that I've helped who lives over in Cheshire, Devon, London, Kent, Derbyshire. So now it can be anywhere in the UK. Okay. Obviously, as a qualified CMAP qualified mortgage advisor, I can't help somebody buy a property in Italy or Sweden or anywhere else. So I am UK based, but I am UK based, not Lincolnshire. And again, going back to what I was saying to you, I always ask every client, I always say, "Did you mind me asking how you got hold of me? Because you live in Cheshire." And Mark, another Mark, that this gentleman said, well, my parents live in Harvey, which is, as you know, is
Yeah.
far away. And they've used your services before, and I was looking for some advice, and I wanted someone that I can trust, not someone that's local. So it came back to that thing we were talking about earlier, that people trust us.
Yeah.
So yes, so we've cast our net wider now, which is fantastic. Again, most of our clients, I would say are within a 20-mile radius, but we can help anybody, and the word is spreading, which is fantastic.
And I think that's the one thing that potentially came out of that awful time during COVID. I know there was people that didn't make it, etc. But in terms of the way we work, our business as well as yours, in theory, you can help anybody now. And
yes.
this conversation we're having today, they were only probably 15 miles apart. It's the ability to have it at whatever time of the day or night that suits, isn't it? And being able to help anybody, anywhere in the UK. So I think that's one of the plus points that's come out of it.
Yes.
Apart from the fact you can't make me a cup of tea, but when we meet up,
I could make you a cup of tea, mate. You just wouldn't be able to drink it.
Yeah, that's it. You can show me it. Well, I think that's all the questions I've got. I do have one question I just want to throw in at the end. This is just all about obviously the Thrive Tribe and the coaching and everything that we do. I just wanted to ask you, for anyone wanting to start their own business, what advice do you have for them?
I think the biggest piece of advice I've got is about networking. I know I think we're both on the same page on this one. But I've been networking actually, it was before day one. I remember going to a networking event about 2 weeks before I started. Mike Stokes, gentleman, was running. You're nodding here, Mike. And I went there, and I didn't know anybody, and I had to give my 1 minute about what I do. But I kept going, and I went to Lincoln Business Club, which again, you'll know that I'm now chair of Lincoln Business Club, but I've been on the committee for 6 years now. But it's the long game. You definitely don't go to sell. Secondly, you don't go and then stop going. If you go on a regular basis, people will get to know you, and then once they get to know you, they'll start to trust you. And people that you speak to, you don't realize that it might be 2 months, it might be 2 years, it might be 6 years, but eventually they might come to you and say, Robert, can I have a quick chat with you about mortgage? And you go, all right, yeah, of course I can. And the people that you meet, and for me, it's not just about business as well. It's about, because a lot of people are sole traders or they're working on their own. And for me, as a people person, it's also a social thing. And if you're feeling a little bit low, and you can speak to somebody. So for me, the number one is get out there and network. And it might be the first time, you might feel really, really nervous. And you might go, I'm not going to go through that door, but put your foot through the door, get a cup of tea, say hello to people, because the vast majority of people out there at networking are really nice people, really genuine people, like yourself and your wife Lucy. You're great people. I knew you before we started working together on the Thrive Tribe, and you'll never know what opportunities are out there until you give it a try. So that's my number one tip.
Brilliant, thank you very much. Yeah, networking is key, isn't it, in all kind of walks of life. And I say, as you said, that's a piece about people being solo and self-employed by themselves, and people do love company, especially with like-minded people at networking events. Yeah, it's really, really good to get excellent advice, Robert. Thank you very much. That's it for today's podcast. So, Robert, thank you so much for joining me. I really, really appreciate it.
No, Mark, thank you. It's been an absolute pleasure, as always. Really appreciate the conversation with you. Thank you.
Hey, no worries at all. And for everybody else, we shall catch you on the next episode. Thank you very much.
Thank you, Mark.